Please welcome to the stage Apex Clearing CEO, Bill Capuzzi.
Good morning, everyone. My name is Bill Capuzzi, and I'm the CEO of a company called Apex Clearing. And my bet is if I ask for a show of hands of who's actually heard of Apex, probably wouldn't get too many hands up in this crowd. And that's, okay, good. I got one over here to the left. That's because we act as the proverbial man or woman behind the curtain of wealth management. We are what's considered or called a custodian, and our job is to hold, to protect, and to service the assets of an end investor. So we act in a B2B capacity, and from an asset perspective, that's equities, options, futures, fixed income, and today cryptocurrency, right, added to the mix. So if you think of Apex, think of us as effectively the intel inside of investing. Our typical clients fall into one of three categories, many of which are actually here today. Actually, the hands that went up are most of our clients. They fall into three categories. Number one is online brokerage, right? Folks that are providing an active trading product out to the investors. The second is fintech, folks that we had Andy up here before that are offering a more passive product out to the marketplace in terms of investing. And the third leg of the stool for Apex is new for us, which is the traditional advisors, and Andy talked a little bit about those earlier, that are looking to add a more digital component to their traditional practice. And this ties directly into our corporate vision, which is to democratize access to investing, making it simpler, making it cheaper, making it more accessible for all walks of life, right? Well, and today I'm going to talk a lot about millennials, and it ties directly into that. So when we think about our client base, we service effectively the millennials. They make up 3/4 of our clients today, and we serviced year-to-date roughly, or processed roughly 100 million trades on their behalf. So we have a really good sense of what millennials are looking for, what they're investing in, and some of that is what I want to impart with you guys today. So let's talk about millennials. Right? They're an enormous demographic, a lot bigger than I expected when I went into preparing for this presentation. 71 million out of 329 million Americans. That's 1 in every 4 to 5 walking the streets today. And two things are happening with millennials. The first is they're just entering their prime earning years. And the second thing is they're about to inherit an enormous amount of wealth. Right? So by the year 2030, if you can see that slide, you can't really see the dates on there, but by the year 2030, the expectation is they will hold roughly 20 trillion in assets. That's about a 4 to 5-fold increase over where they are today. The second really important thing is that they grew up in an age of a much more digital mindset than the older generation. And given this, it's really easy to see how they are going to basically make their mark on investing. It's already happening today, and it's interesting for me sitting as the CEO of Apex. What we see is old Wall Street is just waking up to this concept. So today I want to focus on three things related to millennials and investing. How are they investing? What are they investing in? And who's actually helping them invest? So let's start with the how. How do millennials invest today? How do they think about their financial lives? And my bet is if everyone opened their phones and counted the number of apps that control your lives today, it's somewhere between probably 10 and 20. Right? In my case, because I use a lot of my clients' products, I have 28 different apps that control my life. So I have, obviously, investing apps, active and passive. I have banking apps. Right? I have insurance apps. I have credit card apps. And each one of those is siloed. So I don't know if Anthony Noto is still here, but he talked about that this morning, which is connecting the dots, taking out a whole bunch of the friction across different components of a person's financial life. And that takes true convergence, right? So today, this is happening at a data layer, right? Or excuse me, at the presentation layer. Right? Folks are making, Bank of America is a really good example. I don't mean to be disparaging towards Bank of America, but really good example of they have a good banking app and they have this business in Merrill Lynch. And if you actually tried to connect those two dots, it's as if you're talking to completely different firms. right? They make that connection at the presentation layer, but behind that, there really isn't that connection. And I think there's a couple of companies, a couple that were talked earlier today, that I think are doing a really good job of making that connection. Acorns, actually not a client of Apex, not yet. Acorn started with micro-investing, has moved into more wealth management, and is now moving into banking. And you heard, most of you that were here this morning, heard Anthony from SoFi, who I think is doing really incredible things around connecting the dots. Again, making it simple for the end investor. Started with student loans, moved into mortgages, is now working on banking and wealth management. And again, I think the important part is they're making it seamless. They're taking that friction out of the system. They're making it easy for clients to be able to move across that continuum of different parts of their financial lives. So the bottom line of that is we as an industry have to think differently, right? I do think, we'll talk at the end about millennials. They are driving the change. They are driving what our financial service is going to look like 5, 10, 15 years from now. So let's talk about the what. It's an interesting slide. Millennials have come of age during a time of change, right? You think about all the technology change over the last 10 years. Think about how the world has gotten smaller from a globalization perspective, right? Think about the economic and certainly the political disruption that's happened in this industry or in the world today. And the result is they have a different set of experiences, a different set of priorities than me as a Gen Xer, as baby boomers that are after me. And so look at the slide, and I think there's some really interesting things on here. So remember I said 100 million trades we process year to date. This is giving some insight as to what they're actually investing in. Tesla, number 6 on the list. Interesting, right? Millennials can't necessarily afford a Tesla, but what they are buying into is, right, they buy into the fact that Tesla is disrupting and innovating the entire transportation sector, right? Really interesting. Number 2 on the list, Facebook. Despite their stutter step over the course of this year, this is a product they grew up with. Again, they believe in what Facebook is doing in terms of creating connections for people on an individual basis. IQGE, so number 15 on the list. And I'll be the first to admit, I had never heard of this company. It's embarrassing, but I'd never heard of this company before we put this together. This is effectively, for those that don't know, this is the Netflix of China. And again, I think what it represents for millennials are 2 things. One is the focus on innovation, right? And 2 is that China is becoming much more relevant from an economic perspective. On the other side, so if I ran this same, and we did this, ran this exact same study for the baby boomers, the names on the right are the ones that were in the top 20. Right, but it doesn't, go back to what I talked about. It doesn't tie into their beliefs, it doesn't tie into what they value. So ExxonMobil is number 85 on the list, right? It's a large cap name. It's about 15, 16 on the baby boomer list. It's 85 from a millennial perspective. Pfizer, 109. Dow and DuPont at 250. And it shows, again, I think it reinforces what I said before around them investing in what they believe in. The last one I'll mention, and Square's come up a ton of times already this morning. This was really shocking to me. The number one financial services company that our clients, the millennials, have invested in is Square. It's not Visa, it's not JP Morgan, it's not Goldman Sachs, it's Square. Finally, let's talk about the who. Next slide. Okay. So who's going to provide that integrated experience? Who is going to drive the innovation? Who is going to step up to what the millennials are asking for? And today, it really is a barbell, right? So we have fintechs like SoFi. We're going to hear from Vlad in a little while, from Robinhood on one end of the spectrum. And then you have the incumbents, right? The traditional wealth managers on the other side. And from a fintech perspective, there's 2 trends that we see that are clearly emerging with the clients that we're working with. One is they're gamifying investing, number 1. And along those same lines, they are driving across that continuum of financial services functions, right? So you have folks that are in the lending space, companies like MoneyLion, that are now adding investing. Right? You have firms like SoFi that started from a student loan perspective that are getting into the banking space. You have firms like Capital One that started in banking are now moving into wealth management space. They're connecting the dots and are doing it in a much more intuitive way than today's, what you get, which is really kind of hyperlinks and connection between disparate functions. The second thing that they're doing, and this is a little departure to what Andy talked about earlier, they're adding the human element, right? They are figuring out how to create this connection between the tech and the human, right? Reality is it's important. Think personal capital, think Betterment, who are taking a truly electronic product is how they launched, and are adding that sort of more manual, more advisor-based, episodic advice, so to speak, portion to their business. On the other side, you have the incumbents. And the good news for the incumbents is they have all the money, right? And they support all the clients, the baby boomers. I talked before that slide about where's the money going to, where the millennials going to inherit the money. It's from the baby boomers who have the money today. Most of those clients are supported by the traditional folks. The challenge that the incumbents have are threefold from my perspective. One is an aging infrastructure, right? You're only as good as your weakest link. So you can create really nice presentation layer, nice websites, nice apps, but if you can't support in terms of that ergonomics and be able to open accounts without friction, be able to fund accounts, be able to move from different aspects seamlessly, you're going to have a challenge. The second big challenge I think incumbents have is compliance rules the roost. Right? I don't know how many wealth manager or big banks are here today, but after 2008, for those that experienced 2008, compliance departments took over big Wall Street. Right? They took over, and we are a regulated industry, heavily regulated, maybe overly regulated industry from some respects, but that is entrenched in the big banks and is holding them back in terms of making change. And then the last, and probably most important, it's inertia. So most of the big banks, most of Wall Street, most of where the money is, they're public companies and they care about earnings the next quarter, maybe the next half. Right? They're not thinking like people like Andy Ratcliffe. They're not thinking like people like Anthony Noto. They're not thinking like the leadership within Square, which don't have those same shackles that some of the more public firms have. So from my perspective, the winner is going to be that one that sits in the middle, right? Is this hybrid. Because the reality of it is you have to have, there are times in your life where machines cannot replace humans, right? There's episodic moments within your life, right? Whether you're a millennial or you're a baby boomer, that you need some help, right? The winners are those that are going to create this from a wealth management perspective, this infrastructure and this product and this service that allows to move from left to right or right to left, right? And do it in a seamless way. Right? Today, hybrid, for those that are in wealth management, hybrid is robo with some odd human overlay. Right? To get it right, it's really to connect the human into the experience and make it seamless, number one. Number two is connect other pieces of a person's financial life into that as well. Right? For example, a banking perspective. And I think I thought back to this presentation, I thought about my career and make a really good analogy. I started Wall Street back in the 90s, and for a period of time, I spent time on the floor of the New York Stock Exchange. And back then, every big trade was traded on the floor. There was a concept of a specialist, and there were floor brokers, and they ruled Wall Street, at least from a trading perspective. And I went upstairs, and I sat through a presentation from some quants from Credit Suisse. This is, again, late 90s. And the quants talked about the concept of algorithms. And I remember being intrigued by that and going back downstairs and talking to the head specialist from a firm named Spear Leeds. And I said, look, these algorithms, and this guy's talking about how these are going to automate some of trading. And he thought it was ridiculous. Right? There was zero chance that machines were going to take over what humans did. Fast forward 20 years later, Richard knows this, We went from almost 100% manual trading back in the 90s to today, over 50% of every trade is done via an algorithm. Right? The same thing, make that analogy back to the wealth management space, that hybrid, right, is I think there is a place for machines, and there's certainly a place where humans need to intersect as well. So finally, right, who's going to step up to the challenge? If baby boomers really kind of molded and built the wealth management as we know today, how is it going to look 10 or 15 years from now? Right? How are millennials going to put their stamp? Is it going to be the fintechs? Are they going to be able to move from left to right? That last slide. Are they going to be able to add that human element to the mix and connect the dots from a financial perspective outside of wealth management? Is it going to be the incumbents? Right? Can they overcome their old COBOL code? Right? Can they get past the inertia from their management perspective and move from right to left? Or is it going to be somebody completely new? So one of the last panels talked about Amazon. That's a brand that people believe in, right? Why shouldn't they get into the wealth management space? Seems pretty intuitive to me. There are some hurdles for them. There's some scariness to it. Again, it's a regulated market. But they certainly know what they're doing, and they don't think like Wall Street today. So from our perspective, where we stand today, the folks that we're talking to at Apex, and I think it ties directly into who I think is going to win, it doesn't follow any discernible pattern, right? The folks that are coming to us. The one thing that's really kind of that stands amongst all of the folks that we're talking to is how progressive is the leadership of that firm. That's the one constant that I see in terms of folks that are really disrupting the market. So I'll leave you with this. Dramatic change occurs when market powers shift. That's exactly what's happening in wealth management as a result of millennials. All of us need to adapt, evolve, or risk being the next blockbuster of wealth management and financial services. Thanks very much.